Yeah, good morning, everyone. We saw yesterday US market moving up marginally. It's more of a sideways type of movement which was seen. Today morning, Asian market opened lower, but now recovered. And futures of US markets are also flat. In fact, dollar index is consistently moving up from the low of around 104.5 around 7 days back to almost around 107.6 today. So market is negating that movement. One need to be careful as the dollar index increases. That can put some pressure on the equity indices. So one need to be careful. Apart from that, the sugar prices in has corrected yesterday a bit more. It was moving up since last 7 8 days, but the last 2 days it has corrected sharply, and again came back lower than 18 cents. So there also we can see some movement. As India again next year will be having very large surplus of sugar, and government may be allowing export of sugars, and the prices are lower even before the India export is allowed. So quite possible once the sugar export from India is allowed from next season, that is October, the sugar prices in the international market may correct further. So there again, export opportunity it can become bit concerning. Only positive point is that this is ICE exchange, the sugar prices are lower. But if you see the European price, that is the London price, that is running comparatively higher, which is giving opportunity for Indian company, but that need white sugars to be exported, and we need a special refinery. So those people having that type of refinery can export over there. Uh, Apart from that, oil has moved up yesterday by almost $3 from day before yesterday. From yesterday level of 93.6, today it is at over $96. But apart from that, iron ore and steel continue to remain under pressure. Iron ore is further down by around 0.5%, and steel is down by around 1%. That is getting mainly impacted because of property slowdown in the Chinese market. So overall, seems like more of a sideways type of movement also in the Indian market. Now I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. Last two trading session, we see the Nifty facing resistance in upper side, 18,000 and 18,100 in upside. We see the profit booking today also, and if Nifty managed to sustain above 17,940, then we expect weekly closes for strongly close above this level, but it's trading below that level, and we expect further profit booking towards 17,780 at downside, next immediate support level. If Nifty break that level, then we expect further profit booking, but we see that 17,780 is the downside immediate support, and 18,000 and 18,100 in upside is a resistance. So we see flattish opening today, and some profit booking is there. If Nifty trade above 18,000 today's session and close above that level, then we expect further rally. Otherwise, Nifty is trading sideways on only. Bank Nifty also trading in higher end, and already trading in above overbought level. So next immediate resistance place around 39,850 and 40,000 in upside. And immediate support place around 39,300 and 39,000 at downside. So we expect if Bank Nifty managed to sustain 39,700 and 800 above level, then we expect further rally towards 40,000 plus. But below 39,500, then next immediate intraday support place around 39,300 and 39,000 at downside. Nifty Finance also trading in upper end. Immediate resistance phase is 18,200. and support place around 18,060. Below 18,060, it is dragged towards 18,000, and below 18,000, 890 level at downside. Stock specific, Dabur looks positive. We already given call in Dabur. Dabur looks positive at current level. Upside target around 610 first target and 620 next target. Support place around 582. Second, Tech Mahindra looks positive at current level. We see the breakout in Tech Mahindra in last two trading sessions, and trading above that important level to expect rally towards to 100 DMA around 100, 1150 and 1116 upside, and support place around 1070. That's it for technical. Derivative I can.
Yeah, thank you, Vikas. Good morning, everyone. So as I mentioned in yesterday trading session, as per the derivative perspective, that Nifty is likely to hold the support of 17,800 level, and 18,000 mark would be the important resistance zone. Currently, we are witnessing that as per yesterday trading session, also heavy call writer positions got added up at 18,000 marker, almost around 5 million positions of call writer position got added at 18,000 level. So once if Nifty in today's trading session manages to breach 18,000 level, then directly we might surpass toward 18,100 to 18,300 level. But the only negative front we are witnessing currently in the market is on the monthly basis. Call writer positions at 18,000 level is the highest, means around 18.5 million positions of call writer is at 18,000 strike. So once if 18,000 surpasses, the bear will cut out in the market, and fresh positions from the put writer will get initiated towards 17,900 to 18,000 markers. So currently hold the long positions with the support of 17,800 level, and once if Nifty goes above 18,000 level, manage to create fresh new long positions for around 100 to 150 points on the upper end. We are witnessing that FIIs in yesterday trading session was in a selling mode. Also, we are seeing that index option yesterday increased by 11,000 crore positions. So when our index option positions increases about 10,000 position in a single day, that there might be the cautious momentum in the market. So hold a long position with the strict stop losses. As per the stock specific and sectoral specific, we are seeing that the cement sector is performing very well on the monthly option. Also, we have initiated Ambuja Cement on the monthly basis, and the stock has moved up very well. Another counter from the cement sector would be India Cement and Dalmia Bharat. These two counter also looks positive in current trading session. We have also recommended these two call in yesterday trading session. Another stock which looks positive is Voltas and Power Grid. So currently these four counter are seeing strong buyers from the OY front. So keep watch on these four counters. Thank you.
Good morning. Yesterday, we had hosted the management of Ashok Leyland. Our institution team had interacted with them. And the takeaways from the meeting with Ashok Leyland are that demand traction in the domestic market across all segments continues to be strong. Demand for LCVs and ICVs is witnessing strong traction due to last mile delivery requirements from e-commerce operators, reopening of education institutions, which is leading to more demand for buses. Even corporate offices have now opened, so that is also positive. This has led to good recovery in the bus segment. MHCV segment is also seeing strong traction on the back of increasing construction, infra and mining activities. The current average age of the fleet in India is 10 years. With 5 lakh CVs on road currently, the management expects good opportunities in the replacement market to aid volume recovery in the near term. Exports continues to perform well, and management is confident of sequential volume growth in second quarter as well. One thing on the gap between diesel and CNG prices, since that has narrowed in recent months, management stated that there has again been a shift in preference in favor of diesel models, as the cost advantage of CNG vehicles has reduced. Also, CNG vehicles are priced higher than diesel models. However, company will continue to launch new CNG models going forward. So overall, the bullish view on Ashok Leyland and all the proxy plays on CV cycle, our view remains intact. Thank you.
Good morning, everyone. Wipro has been awarded a multi-year contract to deliver service integration and management services to HM Treasury. Deal size is not known. This is positive to Wipro. Thank you.
Small update on Anup Engineering. It's a small company with turnover of around 300 crore, but uh, are in the capital goods industries, wherein they manufactures heat exchangers. Majorly, the revenue come from heat exchangers, which goes into refinery and petrochemical majorly, and other industry like paper, fertilizer, and all. But almost 70% of their sales comes from heat exchangers, and almost 70-75% of their sales come from these two industry like uh, refinery and petrochemical. The company has reported declining margins in this quarter, mainly driven by higher steel prices. The margin came off to around 18% from last quarter level of around 24%. This is only one of the reasons for that is that this time the sales were quite low at around 50 crore. Generally, Q1 has a lower sales, though the margins were comparatively higher than gross margins were comparatively higher than last quarter. What management has indicated that due to very good increase in the order booking, which has increased from uh, December quarter end of 383 to March end of 393 and now 537 crores. So almost last two quarter they are seeing around 200 crore new order intake. They expect that the revenue could be in this year reach to almost around 380 to 400 crores, which will be increase of almost around 30% year on year. But this year the margins will be lower because of the higher higher steel cost. And the last year margin was at around 24%, and this year it can come down to 20%, which the company expect next year to move back to 24% as the new order are booked at higher steel prices. And also next year again company expect a good growth of around 20-25% in the revenue and can reach to mark of around 500 crore revenue in the next year. So in the current year, things are likely to be more of a sideway as the margins will continue to remain lower, though the revenue may increase. And the company can do with these numbers the EPS of around 47 rupees in the current year, and then with the margin bounce back, they can move up to around 75 rupees in the next year. But the key thing is that though the last two quarters they had seen a very good order booking, that should continue in the coming period. And by the year end, the company is targeting to reach the order booking of around 500 crore plus, which means that they need to further book order of around 270 crores in the balance period of time. Out of that, post Q1, they had booked around 70 crores. So 200 more crore order need to be booked, and which is seems can be achieved considering the environment. So the overall outlook seems positive for the company. Near-term stock may see sideways movement because the improvement will be coming mainly in the next year. So if suppose we see some good correction in the stock of say 10-15%, one can look to buy this stock. So looks positive, but from a next year perspective rather than this year perspective. Then government has withdrawn windfall tax on oil, crude oil, and that is likely to benefit ONGC and Oil India, as they are the key producers of oil in the market. The windfall tax has been reduced from 17,750 to 13,000 rupees. So that will have a direct positive impact on ONGC and Oil India. So these stock can remain positive in today's trade. Now I'll request commodity team to take up from here.
Yes, thank you, sir. Good morning, everyone. Quick update on dollar index. Have risen the range bound movement of 105, 107 level. It has breached 107 levels. So commodities might likely be under pressure. So selling on rise on commodities is recommended. Gold can be shot around 51 700 750 with a stop loss of 51 850 900. On lower side we expect again it to test 51 200 to 51,000, which is a strong support area. So around 51,000 one can buy for a position trade. Silver too is expected to correct 55 500 on downside. So prices could be under pressure as long as sustained below 56 700. So selling on rise is recommended. Crude can be bought 51 70 71 50 7150 to 7170 levels. It can be bought. Prices should test 73 7350 on higher end. So buying on crude is recommended. NG could see some profit taking. So selling on rise around 740 745 is advised. Prices can test 700 odd levels. So selling on natural gas is advised. Metals, however, looking strong. Copper, if sustains below 666 support area, then prices should test 676 680 levels on higher ends. Um, Aluminum also looks good, though it is in a range from 208 levels to 213, but buying on dips is recommended in aluminums. Zinc also may test 320 on the higher side, so buying in zinc also is recommended. That's it from me. Ria can take over from here. Yes, thank you very much. The call is over.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.